Hey guys, what's going on? It's Kane here with Wiser Dividends. Today I'm going to be getting into the Charles Schwab US Dividend Equity ETF, otherwise known as ticker symbol SCHD. Right now, the price for this ETF is $71.29, down 0.2%. When we go over and look at the price for this ETF, it is up 174% from its fund's inception in 2011 all the way to September 23rd, 2023 as the date of this filming. The dividend rate for this ETF is $2.26 with a yield being 3.67%. They have $47.74 billion in assets under management, and they did 3.4 million shares in volume. This ETF is industrials, then healthcare, then financials, then consumer defense, technology, energy, consumer cyclical, communication, basic material, and then lastly, utilities. The main three, as you can see, being industrials, healthcare, and financial, take up almost 50% of this fund, with the remaining amount just being government and cash equivalents. The top 10 holdings for this fund is Amgen Incorporated, AbbVie, PepsiCo, Merck & Co., Chevron Corporation, Coca-Cola, Verizon, Pfizer, Texas Instrument, Home Depot, leading to a total 40.41%. The momentum grade for this ETF is a C for the last 6 months. They're at 3.2621%, while all other ETFs are at 3.7%. For the last 5 years, their total return has been 57%, while for all other ETFs, it was only 17%, meaning they're 230% higher than the average median. When you compare SCHD to the S&P 500, over the last 5 years, they have been almost neck and neck consistently, but sadly, the S&P 500 is still above SCHD by 16%. When it comes to total returns, the S&P 500 barely holds a gain over SCHD. When you compare total price returns or total returns to price returns, it is still a 25% difference, meaning the dividend holds massive categories when it comes to SCHD and the reinvestments that are made from when you hold this. The expense ratio is 0.06%. This is well below the average for most ETFs, being 0.48%. The dividend for this ETF is a 3.7%, which is above 2.6% as the median. So this is an above average ETF, but sadly their growth rate is significantly fallen behind. But over the long term, we have seen 11 years of dividend growth with a 14% increase year over year. So I have no doubt in my mind that this will be a good long-term ETF to hold, but at least in the current run, this ETF is not looking too good. Furthermore, the risk grade and underlying metrics for this fund are a B minus and a B plus when it comes to standard deviation and short interest, meaning the percentage of shares outstanding. All these metrics here are very good for SCHD and mean it's a good ETF. The liquidity on this fund is extremely good, being $48 billion almost, with almost 3 million daily share volume. To summarize this all, I will be looking into SCHD more and more as time goes on, but due to the fact that it is down 5.5% year to date, I feel that this is an incredibly good time to buy this ETF, and we will only be seeing furthermore price appreciation in the long term as all the holdings in this ETF are of the highest quality, Don't forget to like, comment, share, and subscribe. Thank you all. I'm Caden. This is Wiser Dividends.